while technology rushes forward, millions in Africa still rely on time-tested, community-driven financial systems, also known as Indigenous Financial Services (IFS). To address exclusion and growth of these services, we were joined by Kim Kariuki, banking and financial services specialist at MicroSave Consulting.
Indigenous financial services have withstood the test of time, largely because they are member-driven, member-owned, largely unregulated, and involve strong kinship ties. So in the communities in which they're active, it's easy for members to gravitate, and within or driven by a certain mission and purpose, they can then synergize and create positive economic activity. So what we see is that for these Indigenous financial services to actually continue to scale and cover excluded communities, digitization is important because this helps them unlock further efficiency, offers convenience, accessibility, and affordability of products and services.
Looking at innovation and sustainability, what innovative financial products and services are emerging from these indigenous communities in Africa, and also on matters of scaling up? How can they be scaled up, while still preserving their cultural integrity?
So what we found is that a number of these indigenous financial services vary from their nature. Some are short-term and some are long-term. So the more short-term ones come together to solve specific problems. So in Ghana, for example, funeral committees are very big, and so people will come together to try and fundraise and support the bereaved family. And we see similarly in Kenya, where people will form a WhatsApp group, or they will meet after church, or they will meet in a central location and try and raise funds. Not surprising as well, you'll find young people who are looking to get into economic activity, forming a self-help group. And together they start trying to create employment for themselves and for their families. So what we see is that the innovation is being driven by a need. So either it is employment or to address a certain emergency that has come up. But ultimately, they are embedded in the need for communities to save. And in instances where there's inaffordable or inaccessible credit, they come together to allow their members to access savings, but then also to generate credit that they can use to support their activities.
And there are various IFS in Africa. Maybe you can mention a few, but also we can talk about some of the products that MicroSave has in place.
Sure. So you're absolutely right. There are several IFS, and they go by different names depending on the context. So in Togo, they're referred to as tontines. Mm-hmm. In Kenya, we tend to think of them as chamas. In Nigeria, they're thought of as isusus and susus in Ghana. And so all of those examples are often, merry-go-round types activities or roscas, where individuals contribute money in turns, and then at some point, when the turn comes to you, you get to enjoy the total contributions of the group. But then we also have ASCAs, or accumulated savings and credit associations, the types of table banking solutions where people come together, they save money together, and then they can access it at different points throughout the year. So these are different types of IFS that we're seeing in operation across the continent. And these are trying to solve problems that individual members have. They're trying to address the constraints around financing and also insurance, because for a large portion of the population that is using these solutions, they're excluded from the formal financial services. And so, these solutions offer social nets, social safety nets, as well as cheap sources of credit and a safe place to save. So as MicroSave, we are fortunate to have celebrated our 25th anniversary this year. We work in a number of different fields, but with a focus and a vision of trying to drive economic, social, and financial inclusion. Our products generally range from strategy development to product development and technology deployment. As we work with providers, as we work with players, as we work with governments and foundations to actualize meaningful inclusion. And what we've seen is in the instances where we engage with these market players, so both in the private and public sector, we're able to see greater digitization. we're able to see better linkages with technology and financial service providers, which is important to catalyze and to scale Indigenous financial services. And we are also seeing a lot more interest in regulation with policymakers wanting to interact more with IFS to drive meaningful employment.
Great, and I understand that will lead us to some of the challenges that face IFS. So how can they be worked around?
So the challenges with IFS are multiple. Some of them include issues around the regulatory side. Some of them include issues around the financial constraints. We often hear in our line of work instances where group members have been defrauded or groups themselves have lost money because they made out bad loans. We've had issues with technology advances. So some groups are unable to keep up with the wave of digitization. And this is particularly troublesome because it's the way of the future, and we have customers whose needs are continuously evolving. So with the rise of fintechs, with the rise of financial institutions that are linking directly into Indigenous financial services, we find that the groups that are unable to advance digitally are often sort of left behind. And so the particular innovations and solutions that we've come up with providers in this space and how we support entities like these are through supporting them to link, so to find connections with digital financial service providers, and that's sometimes banks or telcos, linkages with technology service providers who will come in and digitize records of members and groups. And this is important because through this digitization, the group increases in its own efficiency, so they can turn around administrative matters and also credit and disbursement matters quickly, and provides transparency. So with the greater efficiency, transparency, and digital trails, it is possible for financial service providers to link and build credit profiles and ultimately graduate individuals who want to access services outside the group. So on this issue of financial constraints, what we see is, aside from fraud and bad loans, there are people in those groups who want to access more financial services than are available within the group. And so through these linkages, financial service providers gain confidence that the group members and the group itself is solvent, is bankable, and so then it's easy for them to access services that are outside of the group's ecosystem while still receiving the social support that is available within the group.
Kim, then how can we say we can effectively measure the social and economic impact of IFS in Africa, considering both individual and community level benefits?
So the best way, of course, would be to measure this quantitatively. So a number of indicators are used in this space to track the growth of informal and Indigenous financial services, including access to new products and services, growth by the businesses that are supported, improvements by individuals and groups when it comes to savings, etc. But what we find is that there's not a coherent way of measuring, evaluating, and reporting. And so there's a clarion call to private institutions and governments to explore how to better keep track of the growth and the prosperity of IFS solutions.